The reason you would want to hold WISE is for two reasons. One, because it's got this baseline value in Ethereum, and two, because it's growing in value from the revenue that we're creating from our protocol. What we've done is we've integrated real world asset companies into our protocol so that even when the market is down, we've got these consistent earners that allow people to earn money on stablecoin. You can deposit USDC into our RWA vaults, and the yield comes from a telecom company called World Mobile, and you can get 20% fixed APY on USDC and USDT. You know, we need to educate people about this because there's too many people that are just dabbling in meme coins and then losing all their money. We're providing higher APY without compromising the risk.
Using Wi-Fi without NordVPN could mean sharing your private stuff with more people than you think. NordVPN. Online security starts with a click.
Tokenmetrics AI analyzes millions of data points to uncover hidden gems, delivering buy and sell signals you can trust. Our AI spots tokens before they moon, helping you stay ahead in the fast-paced crypto world. Join tens of thousands of investors who have taken their portfolios to the moon and beyond.
In the world of crypto, many projects come and go. The real wealth is to be made with up-and-coming projects that endure and that stay and that grow and grow and grow and grow. I'm going to be talking to someone from one of those projects just like that in this video. Hey, Peter, thank you so much for making yourself available.
Absolutely. Hi, it's good to be here.
Yes, you and I, we spoke May 2021, I think it was, 5 years ago. It was the last time we spoke, and we haven't spoken since. You are the CEO and the founder of WISE.
Yes, that's right. And we were just launching our token when you did your video. So now we've come quite a long way since then.
Yeah, and the token is WISE.
Yep, that's right.
And it's on CoinGecko and CoinMarketCap and.
It is, yes, yep, and our biggest liquidity is on Uniswap. So we have one of the largest pools, about $100 million worth of liquidity for WISE and Ethereum. So pretty good liquidity there.
Wow! And the WISE token, is it on Binance as well?
Nope, it's on the Ethereum mainnet. Yeah, on Ethereum mainnet.
Okay, and just when you launched in the summer of 2021, how much was the token then, and how much is it now?
So when we launched, the earliest people that got into our auction, because we auctioned off our supply, got WISE at 4 cents, so that was the cheapest day, and then the average price of WISE was 11 cents. And then when we launched, we went up to our all-time high of 97 cents. So we had a good run during the 2021 bull markets. And now, unfortunately, we're kind of in a major crypto dip because Ethereum is like under $2,000. It was just $4,000 a few months ago, and so our price is affected by that greatly because we have all this liquidity that's paired with ETH. So when ETH goes down, WISE goes down. When ETH goes up, WISE goes up. So WISE is somewhere around 10 cents or something right now, which is more than some people got in the auction, but. So just take into consideration, we were just at 25 cents a few months ago when ETH was at $4,000. So we're weathering this storm of a downtrend and hoping the crypto markets will get back to the races soon.
Sure. And Peter, I think virtually all the altcoins have suffered in that regard. You know, people may be involved in other. I personally am involved in another ecosystem, and all those tokens and stuff, they've all gone down and everything. It's like, come on, right? So it's not personal to WISE. But there's another measure of success that I'm going to ask you, and then we'll get into the details of this project. So when you first started, it was just you, and you had a couple of developers, right?
Right, yeah, one full-time and then one kind of part-time. And now we have grown. We actually have a full development team.
How many in the team?
Over 10 people. So depending on the part-times, we can have anywhere between 10 and about 15 developers. And we don't just build our own products now. We have a dev shop. So we've built several other protocols as well, including a layer 1 blockchain on Cosmos.
Oh, which one's that?
The key chain, KII chain. So those are now our closest partners, and they are launching next month, and they are a Columbia based blockchain. So they want to be like the LATAM version of Binance. So they've got a centralized exchange. They've got all sorts of DeFi stuff as well, and they are based in Latin America and building for the Latin America community. Pretty cool.
Wow.
Pretty cool
Okay,
partners there.
we may have to do another video about that, because when I said another ecosystem, if I can, forgive me here, Peter, we are going to talk about WISE in a moment, right? In I think March 2020, I bought about $500 worth of Atom on a whim. I did no research. So I've seen this about floating about on CoinMarketCap. It looks good. I'll buy some. So I bought some, and then just had it in my Exodus wallet. Wasn't even staking it, just in my Exodus wallet. And then I get this notification that everybody who hold Atom is going to get Osmo. Oh,
Right. Yeah.
airdrop. So then I looked at Osmo when it launched. I was like, oh, this is a really great DEX. So then I got a lot of Osmo, and then the interest rates were really, really high. So I was compounding like crazy. Then it was like everybody who got Osmo is going to get Chihuahua and Juno and Evmos and airdrops and airdrops and airdrops and airdrops and airdrops. So I'm very involved in that ecosystem. I've done very, very well out of that ecosystem.
Oh, very nice.
So if Keychain is going to be launching within the Cosmos ecosystem, then you and I need to talk separately
Absolutely.
about that.
Yeah. Yeah, let's do another video on it for sure.
Yeah. Okay. Now, okay. And I have a confession to make, because we did the video on WISE. I didn't do anything with WISE and stuff. I don't know why, but there's so many projects. It's
Oh, for sure.
impossible to keep.
Yeah. So let me bring you up to date then. Because
well, give us a basic, like what is the WISE ecosystem, and then we'll
sure. So there's two parts to the WISE ecosystem. There's the token, and then there's our flagship protocol. So just briefly about the token. WISE token is very different than your normal altcoin because of the way that we launched it. So we raised $41 million worth of ETH, as you know, when we launched it, and then we used all of that for a Uniswap liquidity pair. And then we locked that pair by burning the LP tokens to create a permanent buy and sell market for our token. And so that's why we are one of the biggest pools on Uniswap, $100 million deep of liquidity. And that is because we raised all that Ethereum and then we paired it with our token. So we didn't use that money for development.
Let me break it down. Let me make sure I'm getting this right. And also for people who don't understand liquidity pools and everything. So you raised $41 million worth of ETH. You then put it in a decentralized liquidity pool, which would have been split between ETH and the WISE token.
And WISE, yeah.
Yeah, 50% of each, right? And then you threw away, pretty much, you got rid of the keys. So no one can get those tokens out.
Correct, yes.
And then people have been trading in and out of those tokens from the liquidity pool, which you can do in a liquidity pool, but you as the team can't get access to them.
Correct. Yes. And what that basically did is it created this permanent baseline value from that Ethereum that we raised that is in that pool. So that's why here we are, 4 years later, we got 100 million of liquidity, which is more than what we started with, even though it's a down market right now. And that's because that value in ETH. And so WISE token is not just a regular altcoin. It's actually backed by this ETH that is in this pool. So we have got a price floor in Ethereum. When Ethereum goes up in price, WISE goes up in price. When Ethereum goes down in price, WISE goes down in price. And that gives us our baseline value. But the other piece of the puzzle is one, we wanted to create a token that is backed by this baseline value in Ethereum, and then number two, we wanted to create a product where we use the revenue to further increase the value of WISE. Because if it was just backed by ETH and then it didn't do anything else, then why wouldn't you just hold Ethereum, for instance? You could just hold Ethereum. But if we're creating revenue with our protocol and we're using that revenue to buy WISE off of Uniswap and then burn it, that is pumping more value into the market cap. And then the reason you would want to hold WISE is for two reasons. One, because it's got this baseline value in Ethereum, and two, because it's growing in value from the revenue that we're creating from our protocol. So it's a very good system that's not. The value is not based on hyperinflation, for instance. Like most altcoins, you can get value, but it's like they print that extra value out of thin air. So it's something that you might get a lot of dilution or impermanent loss from holding those tokens. Whereas we're trying to start from a position of baseline value and then adding value on top of that with revenue.
Yeah, and just so people know, by what you mean by burning the tokens, you're buying the WISE tokens from the marketplace, and then you're burning them. And what that means is you're sending them to an address where nobody has the private keys. And that's it. So then you're reducing the available supply, because those ones that are in that address, which I think is 00000 on the Ethereum blockchain, you can look it up. Nobody can access them. That's it. It's gone. They're gone. So then the supply of WISE reduces, but at the same time, through the marketing and the development of the ecosystem, you're increasing the demand. So over time, the value of WISE goes up. And the other thing I want to acknowledge, Peter, is the I suppose the integrity and the wisdom behind the setup, because one of the problems that plagues the crypto space, as it does any sphere of human enterprise and endeavor, are crooks. They're just everywhere, right?
A lot of greed. There's a lot of greed, and that was the original inspiration for launching WISE the token and WISE the protocol too, because I got into crypto in 2017. That's when I discovered blockchain, discovered Bitcoin, and so I got into a bunch of ICOs. And I realized after a while that these ICO offerings that were around at that time were not very fair to me, because by the time I got to invest in some token, somebody under the table had already made like 100x, whether it's like the team or insiders, but by the time it's a public offering, somebody's already made tons of money and you're at great risk of being dumped on. And this happens over and over and over again. Most ICOs didn't turn out well for the company. So I was like, this is silly, because blockchain is actually the thing that's secure. It's actually a way to build better. It's better technology than what we'd had before. And I felt like crypto was getting a bad rap, not because of the technology, but because the founders were creating very greedy, golden parachute type of protocols where they would get rich quick, but then the people that invested in them weren't really set up to be able to profit. So I was like, okay, we're going to do everything super fair. We did raise a lot of money, but we're not going to use that money for development. We're going to use it all to back the value of the token. And then we're going to build this protocol and use the revenue to further increase the value. And I will say that I have learned a lot in the past 4 years, because what we are building, like what WISE is, it's a lend borrow protocol. So basic crypto banking services, like an Aave, for instance. But the thing is, most crypto users don't want that slow and steady returns. They want get rich quick, and so that's not what I was looking for, because I know that the high risk high reward stuff, it bites you more often than it actually feeds you, and you can see this with like Solana meme coins and stuff like that. Like something like over 90% of the users are down in value after participating in pumped up fund, that type of thing. Well, unfortunately, like I didn't realize that actually most people want to do that, high risk gambling sort of thing, and they're not interested in like the slow, steady returns. I was interested in the slow, steady returns. So what we've done is we've done a little bit of a pivot, because people aren't excited by like 5 to 7% APY on their stable coins. Well, I mean, some are, because
Forgive me, before we go to the pivot, right? Before we go to the pivot, I just go to so I was around in 2017, the ICO craze, and then I lost money on ICO projects that promised the world, and then they collapsed either because they were badly run or where they just ran off with the money. They just got the money and ran off, disappeared. That happened as well. Then there's a couple of others that I've covered on my channel that are, like you said, slow and steady. Slow and steady. They're just building and building and building and building, using their funds wisely, building, real products that people benefit from, and going along. And I don't know if you know, but Goldman Sachs have this saying, long-term greedy, versus the dopamine hit you get from like I put $10 down on this meme coin. Oh my God, I made $1 million, right? We all want that, because I'm lazy. I would want $1 million. from $10 overnight, right? So I get it. So
Yeah.
anyway, you've pivoted, and actually 5% might seem really, really great in the legacy world. Come on, Peter, this is crypto.
Right, right. Yeah, so well, the thing with yields in crypto with these lending protocols is during a bull market you can actually get pretty good returns, like even 15% plus returns. But then in a bear market and like during dips like we're kind of at now, you see more like 3 to 5% is what you get for depositing it. That's just what the demand is. And so it wasn't necessarily a pivot, but more of a added feature where we're really focusing on what people need, and that is higher APY. And what we've done is we've integrated real world asset companies into our protocol,
Mhm.
so that even when the market is down, we've got these consistent earners that allow people to earn money on stable coins. For instance, you can deposit USDC into our RWA vaults, and the yield comes from a telecom company called World Mobile, and you can get 20% fixed APY on USDC and USDT. And so that is our latest big feature. And that's been working very well for us because even if you're not, like you said, 5 to 7% APY is okay for maybe big institutions because that's better than conventional for sure. But for regular crypto users, maybe they want something more attractive than that. What we focus on is we're providing higher APY without compromising the risk. So you're not earning 20% from some type of crazy inflation or some type of risky protocol or leverage or anything like that. It is straight yield coming from a telecom company, which is it's like an AT&T or T-Mobile. This is basically people that are paying their cell phone bills. That's where the yield is coming from, and it's very good yield because this company is building their cell phone tower equipment. They're doing it much more efficient than those legacy players that haven't been competitive in years because they're so big. So they're big legacy companies, and there's opportunities to be able to go to these rural areas to do it more efficiently, be able to earn a better return, and then they are providing these returns onto the blockchain to blockchain users like us. So that's what makes it a RWA or real world asset.
Okay, all right. So let's say I've got, I don't know, $10,000 of USDC, and what you're saying is that this particular service, I can get 20% APY on the $10,000 in USDC, and I'll get paid in USDC, and USDC is always about $1. It's just always $1,
Exactly.
right? So it's kind of predictable. There's no ups and downs like with the bear and the bull market. It's always $1. Now, I deposit it in another website. Do I still have the private keys? How secure is it? Whose crypto
So
is it? How does that work?
yeah, so our application is wiselending.com. So that's our website. We've got the decentralized lend and borrow pools there. And one of the tabs on our website is the RWA tab, so the real world asset tab. And so if you go to wiselending.com, you can open up the app there and then go to our RWA tab. You'll see a vault there where you can deposit either USDT or USDC. And when you deposit money in that vault, you'll immediately start earning 20% APY. So, like you said, you put $10,000 in, it will constantly be earning. After 1 year, you will have earned $2,000, well, 2,000 USDC. You could have claimed that at any time. You could have auto compounded that at any time. So, to increase your APY even a little bit more, if you use the auto compounding. And what's happening when you put the stable coins in the pool is that is going to the telecom company, that's going to World Mobile, that is purchasing those cell phone tower equipments that are being used by the users. And then every single month, World Mobile is sending back the USDC to provide the interest, that's the revenue that's coming from the service, back to the users.
Right. Okay. So then I don't have the USDC. That's important for people to know, because then
Yeah.
there is a risk that, I don't know, something could happen with this telecoms company. There might be regulatory capture. Who knows, right? So people got to, when it comes to this project or any other investment, Got to do your own due diligence and don't put any more than you can afford to lose. Okay, but that's important to know, because if I know I'm giving it away, then at least I can be responsible for that risk versus, there are some protocols like you get a staking return, but it's still in my wallet.
Exactly. Yes. Yes. So that's the key with the RWA. So the railroad assets are off-chain companies, and so so there are risks to that, but then you're avoiding some risk as well, because with the on-chain stuff, you've got big pools of liquidity that could get hacked, for instance, and so that happens all the time. There's billions of dollars every year that gets hacked on a protocol because there's money sitting there on chain, and if there's some mistake or security loophole there, like, it could be taken away. um, the RWAs don't have that risk because
Mhm.
the money is immediately, being utilized for these physical for this physical equipment. And so it's just like any regular company where, you've got this front facing company, the money's there. So there's no big pot of money for a hacker to steal on chain. However, there is that centralization aspect where you have to do your due diligence, make sure that, the company is legitimate, et cetera, et cetera. With the RWAs
Sorry,
that
Peter.
we integrate.
Peter, sorry, forgive me. I've interrupted you several times. I'll carry on, by the way, interrupting you. So it's a little bit like investing in any regular business in the legacy world.
Exactly, and there's benefits to that because certain industries, like telecom, for instance, is very recession proof.
Mm.
You think about, like, Bitcoin might go down more, but no matter what price Bitcoin is, people still need internet, and people are still going to pay their cell phone bills. So it's something that's very recession proof, and then it's also a technology that we need more of, and the technology is not at risk of becoming obsolete. Like the antennas on cell phone towers are basically radio transmitters, and we've been using radio transmitters ever since World War II to be able to create networks where we talk to people, and that hasn't changed at all. And the only other option to be able to create a telecom network is satellites. But satellites are always going to be more expensive, just because of the sheer physics of a satellite being, that far away, and the signal traveling that far. It will never be less expensive than radio transmitters that are placed on the ground in a network. So we wouldn't want to integrate like a risky business, like, the hotel business or something like that. But these really good businesses, we are the ones we're integrating. We've got telecom, we've got a couple more in the pipeline that is like in the energy business, in the banking service business, and these are really solid options from companies that are extremely well vetted, that are basically offering a piece of their revenue to users, in the same way that, like, Airbnb or Uber is doing this, sharing of revenue. If you own a house, you can partner with Airbnb and earn a piece of their revenue by turning your house into a hotel. If you own a vehicle, you can turn that into a revenue share by partnering with Uber. And then this telecom industry is basically, oh well, you can purchase some radio antennas on a cell phone tower, so you can own a piece of the telecom business and be able to earn a revenue. So that's by far the best option we have on our platform right now, because 20% fixed APY is pretty fantastic. We've been able to get over 20% with our on-chain crypto stuff as well, but only during like a raging bull market, where this is fixed APY. Rain or shine, market up or down, people are still paying their cell phone bills, and so it's very consistent.
Yep, yeah. It's like, I suppose it's like stocks in a way, a sort of fusion between blockchain and stocks. Because I put money into a company and I'm getting dividends, except this is regular APY, and I don't have any claim or voting rights on the company like I would if I were a shareholder. Okay, now is this open to people all over the world? Is there KYC and all that business?
There's no KYC because of the partnership. So if you go to World Mobile's site right now, all the antennas are there, but it says sold out, sold out, sold out, sold out. They're in very high demands, and every time they have a new tranche, it gets sold out very quickly. So that's where the partnership comes in. We have an allocation from them, so that we have, millions of dollars set aside where people can put money in our vault, and through that partnership, that's always going to get funded. And so you don't need to KYC. all you would need to do is connect your browser wallet to Wise Lending and then deposit into the vault either USDC or USDT, and then you'll start earning that APY immediately. So very simple, just connect and deposit, and you start earning.
Not bad at all. Okay, and you've got this one, the World Mobile. What else do you have coming down the pipeline? Actually, before that, what else do you have already as well?
Yeah, so besides the RWAs, we have our basic on-chain lending protocol, which is, you can deposit Ethereum, you can deposit wrapped Bitcoin, you can deposit any of the stable coins, and that goes into an on-chain pool, which people can borrow from. And whatever the borrowers are paying, then that goes to the lenders. So just like an Aave or any other lending platform. We built our platform from the ground up. It's not a fork of another protocol where most new lending platforms are like a fork. Ours is built from the ground up with my own team, and we made some innovations that help to increase the APY by bringing demand. So because we offer some leveraged farms that help more people to borrow, whereas like a regular protocol, maybe only 50% of their pool of their funds that are deposited, maybe only 50% of them are borrowed. That's true with Aave and many other lending protocols. We added in some extra features to help increase our borrow rates, to increase the demands, and that gives us a little edge on APY if you compare us to other lending platforms. And so the difference here is that this is fully on chain. It's backed by Chainlink Oracle. So, you're putting money in. It doesn't stay in your wallet. It goes into the lending contract. However, you're the only person that can access that. And it's the lowest risk level that you could take in crypto because you're basically interacting with a fully decentralized smart contract. It does allow other people to borrow, but there's Chainlink oracles that are guarding those lenders, so that yes, you can't the borrowers can borrow, but they wouldn't be able to become under collateralized because their positions would be liquidated, and then the collateral sent back to the lenders before any of that ever became a problem. So it's a they call them DeFi primitive. So the basic building blocks of DeFi, and it's the lowest level of risk possible. So that's what we have now. In addition to the RWAs, where the RWAs are just this the separate thing where it's a real world assets, and you have to take into consideration, hey, this is not fully on chain lending. But it's a solid company, and you can do your own research. Read the material there and decide if that's something that you want to do to be able to obtain a little bit higher APY. Well, actually, much higher APY. 20% fixed, and there's different risks there. The
Okay.
centralization risk compared to the on-chain risks.
Okay, and just on those risks, right? The risk could be a hack or a bug. That can happen with any software contract. And of course, don't invest any more than you can afford to lose into this or anything else. Perhaps as a slight aside, maybe the safest thing of all is gold. That's it, right? But that has other risks. You carry it and lug it around with you, right?
Yeah,
But
and gold is doing very well now
gold is doing
too.
very, very well right now. Okay, but no, Peter, I'm a bit embarrassed to say this, but not too embarrassed that I'm not going to say it, which is I don't understand crypto lending. But let me see if I can work it out with you. So if I take $10,000 worth of ETH or Bitcoin, I deposit it in this contract, and it's locked, and I'm the only one that can access it, but it's locked for the duration of whatever I choose, the lending periods.
Okay, yeah. So let me back up for a second, and we
Right.
can go over that real quick because what crypto lending is, it's banking. It's regular banking services on chain. So like with a regular bank, when you put money in the bank, they're going to lend it out to other people. That's how they make money.
Hmm.
And there's also this thing called fractional reserve lending, where the banks don't just lend it once, but they may lend it 10 to 100 times.
Or in the city of London, infinite number of times when it comes to
Right.
gold.
Right, which isn't very it isn't a very good thing necessarily, because if there's a run on the bank, then the bank doesn't actually have everybody's money because they lent it out a bunch of times. So in this way, on-chain lending is actually better and safer because we're talking about over collateralized lending. which over collateralized. It's like the same as getting like a home equity loan, where let's say your house is worth $100,000. Well, you might be able to get a loan of $60,000,
Right.
a home equity loan based on the collateral of your home. So that's what crypto lending is. You can deposit and then you can borrow, but you can only to borrow a portion of what you deposited, because it's always over collateralized. And so this is one thing that makes crypto lending very, very safe. And so there's several ways you can use this. You can just use it like a bank, like a savings account, where like, oh, I'm going to deposit my ETH or deposit my stable coins, and I'm going to get 3% APY or whatever it is, from people that are borrowing that, and that could be it. You could be like, okay, I'm happy with 3% APY, and the money, and so you're putting your crypto in a pool with everybody else. So let's say your $10,000 is with other people's thousands of dollars, and there's millions of dollars in the pool. And so let's say that there's $10 million in the pool total of Ethereum. Well, people can borrow that Ethereum only if they've deposited value first. They can borrow that Ethereum, do whatever they want. Maybe they want to short Ethereum. They could sell Ethereum and then buy it back cheaper. Do whatever they want with what they borrowed, and they're paying a borrow rate to the lenders. And so that's why you can just deposit and be able to earn an APY. And then if you want to do something more advanced, what a lot of people do is they will have the cryptos that they want to really hold long term, like wrapped Bitcoin or Ethereum. The price is going up over time. They never want to sell it, so they'll deposit those as their asset, and then they might borrow stable coins versus that. So I might deposit, $10,000 worth of ETH. Well, maybe then I could borrow $6,000 of stable coins, and that will allow me to do a number of things. Like, first of all, I could buy more ETH, and then when that ETH goes up in value, I can sell it, and now I've just made a profit by doing basically a long on ETH. I could pay my bills, like maybe I've got a few $1,000s of living expenses every single year, but I don't want to sell ETH at these lows. Well, I could borrow stable coins, pay my living expenses, and then maybe when ETH is back up at $4,000, then I sell ETH and then pay back what I borrowed. And that has just saved me from having to sell Ethereum at the lows. Or let's say I've got another investment, like a completely separate investment.
Right. I could take the USDC and put it in World Mobile.
Yeah, exactly. Yes. So one way to use our platform is deposit wrapped Bitcoin, deposit ETH, borrow stable coins, and then put that in World Mobile, for instance, on our platform to earn 20% APY on that. So you will never be paying 20% APY in what you borrowed. You might be paying like 6 or 7% APY, and then you'd be earning the delta there. And so that's what crypto lending platforms are, and they're very successful. Like Aave, for instance, has got $40 billion total value locked on it. A lot of institutional money, but a lot of retail as well, and just whales or anybody that wants to earn some APY. But the drawback is, during bear markets, it's not very good APY. It's like 2% on stable coins. Like, it will go up to 10% plus during a bull market, but it doesn't have that consistency. And so that's why we added in these World Mobile RWA opportunities, so that we got the best of both worlds. Yes, you can have the fully on-chain lending to meet your everyday needs for earning and for borrowing, should you need to or want to. And then we also have got these other opportunities that offer a fixed 20% APY, for people that want just a really good savings account, to earn the highest possible without really taking big risks like you would on some other platforms.
Right. And that's paid in USDC and USDT.
Yep, exactly. And we just launched a version 2 upgrade that makes it super smooth. You can auto compound it anytime you want. You can claim it anytime you want. So it's very fluid. You put money in, and then you'll just immediately start earning money, which you can decide to claim and auto compound. And we've even set it up so that there is a queue for people that want to sell out and that get their principal back. We have those options as well. It's not instant like it is with our on-chain stuff, because we'd have to sell those antennas first, so there's a little bit of a lag for the time in between for selling the assets. But it's a full system where you can deposit, you can earn, you can auto compound, and you can queue up to withdraw as well.
Okay, but given that this is on the Ethereum network, what about gas fees?
Okay, so we have it on Arbitrum as well. So Arbitrum is much less gas fees. Now, Ethereum gas fees are actually really low right now, by the way.
Now,
You're going to be paying less than $1 to get in, but that is a very good point, and this is why we can offer this vault on any chain. Like Keychain, our big partner, we're going to be launching a vaults on their chain too. We're going to be launching on the Casper chain as well, and then we already have them live on Arbitrum. And so for users that are wanted to get the cheapest gas option available, then just deposit from the Arbitrum blockchain, and it'll be super cheap.
is there any minimum or maximum deposits?
No, you can deposit one USDC if you want, but that's only like 20 cents per year. So beware of that.
But if you compound it,
Yeah, true. It will compound. Over a period of 100 years, it'll turn into a lot.
as it was after 70, I think after 3.5 years, it'll be $2 or something if you
Yeah.
compound it.
Yeah, auto compounding is really powerful over a period of time for sure.
Yeah, absolutely. I think Einstein said it was the eighth wonder of the world, compound interest. Okay,
Yeah.
so you got that, and any other products you've got?
Well, Keychain is going to be pretty exciting, actually. Um, so, Keychain is going to be like the Binance for Latin America. They already have their centralized exchanges. These guys are really solid individuals. They're our closest partners right now. The two founders, they are ex investment bankers from Boston. And so they really understand compliance and regulation very well. And so now they've got family ties in Colombia. They're living in Bogota, Colombia, and so they are one of the, like, honestly, the only centralized exchange that I've seen in LATAM that is going through all the proper loopholes for compliance as
Right.
far as crypto regulation. Usually, if you look at any South American company that is dealing with crypto, they're trying to like hide it from the government because they're scared of all the regulations and stuff like that. These guys are the only people that I'm seeing that are there. They've got a centralized exchange, fiat onboarding, fiat on ramp, off ramp. They're doing millions of dollars per day in volume, and now they're launching a blockchain for the Latin America community to be like the DeFi blockchain to go with that entire ecosystem. And they're very well backed at two. They just announced they have a working capital from Nimbus Protocol, $20 million that they've raised from Nimbus Capital. So it's a very well funded, very exciting blockchain. There's going to be tons of opportunities there, and like I was saying, it's in the Casper ecosystem, or excuse me, it's in the Cosmos ecosystem. So it's a
Yes.
Cosmos layer one blockchain, but it's an EVM module as well. So it's compliant and able to talk with all the Ethereum blockchain. So definitely exciting stuff there. I'm looking forward to that.
We will do a separate video about that. I'd love to find out more about that. Now, you said at the beginning how much the project has grown in terms of the staff, but what about in terms of the number of users and the number of people, the community? Because that's also important for crypto.
Yeah, so we just launched our RWA vaults not too long ago. And so we don't have a ton of users yet. We do have a decent amount of total value locked, but we don't have a ton of users yet. With Keychain, we do
But what about
have.
the other aspects, the bank, Wise Lending, the banking service that you spoke about? How's that growing?
Yeah, yes, we do have. Let's see. I think we were touched $3 million total value lock, so a modest amount still,
Mhm.
and that's because we these things weren't live until just recently. So we've actually taken 4 years to actually build the entire protocol, and so now we're launching, and we're just starting to build traction now that we have our protocols live. We found this product market fit with the high APY vaults, and we're just starting to grow now. So we had over 10,000 users of Wise back in 2021 when we launched, and that was at the height of the bull market, and that has faded, and interest has fallen off as we've taken our time and taken years to be able to develop. Now we've launched again, and we haven't reached that height of users that we had before, but given the fact that, like, the quality of our products and the fact that we finally have built and have launched our products, it shouldn't be long now. Like, we do know that we have $50 million coming from our partnership with Keychain that will be deposited on Wise Lending. We also are seeing users every day that are putting more money into the vaults. And so right now we're just kind of trudging along and growing, and we're expecting to see hundreds of millions of dollars in total value locked before the end of the year.
Yeah, yeah. Well, the two things I'd say to that, right? And I say this to my cousins, whom I've been teasing since 2013 about getting into Bitcoin. That when Bitcoin goes above 100,000 and then 125,000, which I think it will, then they'll get interested. Now it's more expensive, right? Then they'll get interested. Well, it's only $84,000. Yeah, yeah. It was $100 when I told you about it. Right.
Yeah, it's been slow and steady for us. Most of the new users over the past like 2 or 3 months have been because of the Trump meme coin and Solana meme coins. We don't offer anything on Solana, so we weren't able to really capitalize off of that, and a lot of that has faded away now that the meme coin cycle is kind of not as big as it was. When the Trump coin was launched. What we're doing is we're finding those slow and steady users that are noticing that, hey, crypto is not just a get rich quick scheme. It's a place where you can put your savings and be able to safely earn more than what you can on a stock market or your savings account, regular banking. The most you're going to get there with like a Liberty Mutual is like 4% APY. Same thing with like a Robinhood, or I get offers all the time. It says high APY, like high interest bank account, 4%. Like, interesting, very interesting.
Wow,
We could do
4%.
much better. Yeah,
You mean
exactly.
today? I'm sure you say that to the gym today.
Yeah, that would be better.
But the other point I was going to make, Peter, is that you've spent all this time building. You've survived a bear market. You're surviving and thriving in this dip, which is still, I think, we're still in the 4-year cycle, the bull market phase, I think, and it's still early for people. It's still early.
Yeah.
So, and one of the things I say a lot is, is that patience pays in the crypto space. Because I bought Bitcoin for $15.
Oh, congratulations.
Yeah. The mistake I made was I didn't buy enough, right? Because there wasn't much information around January 2013, right? When I bought my first Bitcoin. It goes up to 1,000, crashes down to 100. I could have jacked it in.
Yeah.
But no, patience pays. So I'm interested, and I say this to my family and friends, go buy a little bit now. Don't put any more than you can afford to lose. Come back in 4 years. Come back in 8 years. Come back in 12 years. Let me know how you did. And I suppose that would be the same. I make no promises about your project, but what I can see is, from what you've said, the integrity with which you set it up, the team has grown. You're building and building and building. You're still here. You're still here, right? And you're offering viable products that give people yield, and we all want yield. One of the things that I want to say is that I don't know if you know, but I work as a child protection social worker, so I do my channel part-time. And one of the things and I really enjoy my work, really, really enjoy it. And one of the things that crypto has allowed me to do is to engage in that, pay off my mortgage, which I wouldn't have been able to do otherwise, and not have to worry about money.
That's the dream, man. I think that we need to educate people about this, because there's too many people that are just dabbling in meme coins and then losing all their money, where if they'd taken the original amount of money they had, whether it's just a few $1,000s, whether they have more in savings, you can leverage crypto to be able to safely compound that into something that can make you crypto rich as well over a period of time, not overnight, but definitely over a period of time. And that's something where we can all be winners. So whereas like dabbling in meme coins, 90% plus they're not winners. They end up losing money. And so I think that's a really good strategy. And of course, definitely helps to be able to buy Bitcoin so cheaply. That's insane.
But it's still cheap.
Yeah, it's still
It's
cheap.
still cheap.
It's still cheap.
It's
I
still
think
cheap.
I've never met anyone who bought Bitcoin as cheap as $15. So that's I think you get the trophy there. That's pretty awesome.
Do you know what the tragedy is?
What's that?
I found it when it was $5. Didn't buy
Oh,
it. I didn't know anything about it. It's like, what is this Bitcoin thing, right? Okay, Peter, is there anything else you want to say before we finish up?
Well, I just want to thank you so much for reaching back out to me. It's been great reconnecting. Like you said, I'm still here. Like we could have gotten distracted by the whole NFT bubble in 2021, and launched a bunch of NFTs. We didn't do that. We have integrity. We stuck with what we're doing. I'm still here doing the exact same thing, the exact same project. But we're not stuck in a rut either because we've pivoted as necessary. We've added features and we're finding that product market fit. And I think we're in a really good place now to grow, through the end of 2025 because now we have these great yield products. So I hope everybody checks them out, and I really appreciate the opportunity to let me share with you.
Absolutely. I'll have a link to the website and your X and the Telegram group, and people go find out, go check this out, do your own due diligence, and fill your pockets with crypto profits. Crypto Rich and Crypto Peter signing out. All the best. Bye bye.